Welcome to M&A Science Live, where leading M&A practitioners share lessons learned from their experience. When you use proven techniques in M&A, more value is created. If you're interested in keeping up with the latest from M&A Science, visit mascience.com and subscribe to our newsletter. You'll also find tons of free resources on the website. Again, that's mascience.com. I'm your host, Kison Patel, CEO and founder of M&A Science and Deal Room. Joining me today is Ailene Holderness, head of M&A at IAC. Today, we're going to talk about hiring an M&A team and supporting multi-vertical strategies. How are you doing today, Ailene?
Doing well. Thanks for having me, Kison.
My pleasure. Could we kick off with just a brief background on your M&A experience?
Sure. I joined IAC just over a year ago, and my background is in private equity and investment banking. I'd been investing in consumer companies primarily for just under a decade before joining IAC. And I was really attracted to IAC for its track record in building industry-leading consumer internet companies. IAC is such a unique animal. Candidly, I didn't know much about it before this job opportunity found its way to me, but I'm so happy that I did. It's a publicly traded holding company that has built many brands and companies that you and I would know as consumers. Match.com, Angie's List, Vimeo, Expedia, just to name a few. And the M&A team is integral to IAC's growth. We help to source, diligence, and execute acquisitions for the businesses we operate and identify opportunities in new verticals.
You're in a lot of different verticals, so I take you don't get bored easy over there.
Not at all, and always searching for the next leg of the stool. So as I said, consumer companies and consumer internet is a broad investment mandate. So always thinking forward and building kind of more thinking forward and industries where we see offline to online transition, where we see inefficiencies that we can disrupt, and where we can build really big businesses.
One of the big things you were tasked with was building out an M&A team. Can you walk me through your approach?
Sure, yeah. So one of my core responsibilities as head of M&A is leading a smart, ambitious, and growth-minded team. It's just under 10 people. And it's an important, people are so important to M&A at IAC, as many of the business leaders at IAC, CEOs, CFOs of our companies started in this very team. It's a funnel of talents that we mine and harvest for future leaders. So yes, to answer your question, building a bulletproof team, one that's nimble and hungry to identify the next big idea for IAC was one of my goals. One of my goals was to build a strong, high-functioning team. It's a very exciting time in IAC's history. We're in build mode. We're sitting on $3 billion of cash. We're about to spin off Vimeo and looking for companies that will fuel the next leg of growth. So looking for that hungry self-starter, someone who has demonstrated some level of risk-taking in their careers and has a growth mindset. As we look to build the team, talent and people who would really take the opportunity at hand and run with it, be able to work independently, but also collaborate with the rest of the team. That's what I was looking for. I think that I had a lot of help in that our recruiting team is led by an IAC industry vet, Laura Sapp, who's been here for 20 plus years. She helps me, look for and really articulate why IAC is different and what types of people and what skill sets really fit within our ecosystem. So my approach was to work collaboratively with her, of course, taking the feedback of people who have sat in this role before, but really go out there and see who was attracted to the current mandate and find the best people we could.
Like when it comes to getting the culture match, what are some of the unique things that really stick out when you're looking at candidates?
I'll start with one of the important things that actually our CFO, Glenn Schiffman, when he hired me and within the first couple of months I started in the seat, he said, you really don't hire someone solely based on their experience and capabilities today. You're looking for future potential. That's what you're hiring. So how can you suss out a person's ability to desire to grow, learn, and evolve beyond what they've been doing for the last 10 years, 5 to 10 years, depending on level of maturity we hired into our team. So to touch on it again, I think I took this to heart, and I really believe that we looked past kind of being very regimented on, of course, there was requisite skills that you needed, educational and kind of requisite experience. But we did look beyond someone who ended up being a great hire. He didn't have consumer tech experience in his resume, but you could tell there was that genuine interest and passion for what we were trying to accomplish, what the history and legacy of IAC was. And I think sometimes people overlook and focus too much on resumes and what can be demonstrated in words. But when you speak to someone and look across the table and ask them to tell you about a company they find interesting and why, you can tell if they have a vested interest or they're just speaking academically. So I always ask, would you put your own money and bet on this company? Would you quit your job to be part of this company? And that's the type of conviction I like to see in a pitch. I think you can sense genuine interest, even in a video call from someone if that's coming from a place of passion.
That's really cool, is really looking for that common level of passion and common goals as well. When you go through the process of assembling a team, what's your approach to really getting the right combination of skill sets to come together?
The word diversity is used a lot. And building a diverse team doesn't really just mean hiring people with different backgrounds of race, ethnicity, socioeconomic. Diversity of thought and experience is something I think about often. So that comes across based on someone's personal experiences as well as their work experiences. And it's so important to what we do here at IAC. Groupthink is a pretty scary thing when you're investing in tech companies, when the pace of innovation is so fast. So we try to avoid getting into these overconfidence cycles where we think we know based on, something that happened 5 years ago or something that just worked for us. So anyhow, bringing people together with diverse experiences was something that was a priority for me. I think that it's overlooked sometimes that someone's personal experience, having grown up somewhere or maybe done a stint that doesn't fit into the perfect cookie cutter path, gives them an edge or gives them a different way of looking at something. They can contribute around the table. A lot of our investment committees end up being spirited debates where it's a free forum based on what you read and what you know. People can contribute freely around the table with our most senior execs. And you really see how people with different experiences consume products and services differently. And so that's part of something I always suss out for, trying to hire people that won't have the exact same experience when looking at a consumer product or had a different experience with home ownership growing up or with an insurance product, have different perceptions and beliefs because of their very place of growing up and what work experience they have.
So you're not laser focused on just hiring Goldman bankers and Harvard MBAs?
Yeah, it's a tough one because having come from the world of investment banking, I do think great training comes from many of those institutions you mentioned. Rigorous and very technical skill sets are developed at places like Goldman. I worked at Citi in my first year post-graduating college, and I wouldn't give up those experiences for anything. But I think that, a perfect example is there's some folks on our team who come from very similar backgrounds. Did investment banking, did private equity, know that skill set. We don't need 10 people who have the exact same skill set and kind of career path. And we have purposely looked for people who have an edge or a difference of opinion, as simple as worked at a public fund as opposed to a private fund, has experience doing something entrepreneurial, has experience working at a startup. These are things that, really jump off a resume page for me because it shows a level of risk taking. It shows a level of, just breaking off from the norm. I think a lot of us do have actually investment banking backgrounds for a couple of years, but we've had squiggly lines getting to the ultimate end goal of where we are today. And I find that to be a huge value contributor to the debates we have at our investment committee.
This might be redundant, but What are key things you're looking for when you're searching for people to join the team?
It's a topic I really like talking about because I think it's so important and changing. I'd say a couple things. So I'll repeat some of the ones. So sorry if I'm being redundant as well, but growth-minded and growth-oriented in nature. So people who are willing to accept that what they used to think they knew perfectly may not be, no longer be true. So hard to articulate, but you can kind of get at these qualities by asking someone how they think about the future of an industry, for example. You've spent your whole, let's say someone has on their resume, they've spent their entire career, someone like me, looking at consumer retail. What that meant when I was an analyst was mostly offline businesses, multi-unit retailers that spent marketing to ultimately drive consumers into their stores to purchase goods. Obviously, over the last 10 years, that has changed dramatically. And if you spoke to someone who was in the same spot as I was 10 years ago, consumer retail is a completely different paradigm now. Online is a huge push, e-commerce, how you attract customers in new channels due to social media, the growth of social media, as well as search engines. There's been so much change in industries, but I think there are some people who, and this is dynamic, by the way, people can change the way they think about things, are so eager to learn about what's changing and question, rethink what they know. And there are people who are really hesitant to rethink what they know because it makes them uncomfortable. I think it's a learned skill set for sure. I think the more it makes people uncomfortable to learn new things. But I always look for that quality of being able to rethink or question yourself and enjoy that process of questioning what you know. Because as an investor, that's what prevents you from going down an overconfidence cycle, making a bad decision because you think you know the answer when you haven't thought through every variable that could change your
Some of the
perspective.
stuff you're describing sounds like the entrepreneurial mindset where you're constantly looking for the don't knows and you're developing this quick learning pattern around it. And also that whole thinking out of the box, like what are the non-conventional ways to think about things and problem solve.
I just read Adam Grant's Think Again, and so probably some of the nomenclature I'm referencing is overly inspired by that book, which I thought was really riveting and actually made me rethink many of the things I thought to be true, which was delightful. And he has this great part where he says, I'm going to butcher it, but you should delight in being wrong. And as a very type A perfectionist person, he's so right he's dead on, and people like to be right, have a thesis, and then prove it correct. That's why there is confirmation bias. But if you can trick your mind into be delighted by being wrong, you learn so much more because you don't learn anything from being proven right. You only learn when you're wrong. And that just really struck a chord with me when I read it. And it's something I made mandatory reading for everyone in my team. And I think all investors should put that hat on when they're thinking about new industries, especially in industries that are changing and evolving so quickly.
I like that mantra, taking pride in being wrong. What was the name of the book again?
Think Again by Adam Grant.
Adam Grant. I'll have to check that one out.
Yeah, I think you'd enjoy it. He has a couple of key messages in it, but that was a major takeaway for me.
Where do you find talent?
We like to, this is so cliche. We do find it we use LinkedIn a lot. I can credit that you don't need to go down a traditional path to find people. Generally, people who are interested in your company apply to roles that you put out. So that was a learning for me, certainly. I was wrong. The world I came from was always using external resources, having very curated lists of analysts, and you can only find good talent if you went to a subset of recruiters and very curated group of prospects. But we've gone very broad, or at least I've seen from the outside in, and working with our internal team that I referenced, led by Laura Sapp, that you can find talent in places you wouldn't normally look, and people who have, to be cliche again, gone off the beaten path, folks who are off the beaten path who are interested in potentially making a career pivot or have come out of business school and tried their hand at something and now want to get back in investing. These should not be dings on people's resumes, right? I think risk-taking should be rewarded in institutions who embrace that and companies who look beyond people who have just followed a very set path can find people who can add a lot of value to their teams because they are risk takers and have done something maybe outside of the box.
So LinkedIn, great platform. A lot of people can post jobs, and it sounds like you're not doing too much of the passive hiring where you're constantly looking for people and saying, hey, you're ready for a new challenge. It's a little bit more of posting ads and sort of letting people find you.
You know, that, and I'd say I'd be remiss if I didn't mention we have a great referrals program. So people are rewarded. People within, we have a large network at IAC, ever evolving. And we definitely incentivize our employees on referring people for roles that they think they'd be great at and being monetarily rewarded if that person ultimately takes the job. So you'd be amazed at how many people on my team and others have been referrals of someone outside in a different division at IAC or at a portfolio company. We've found great success in doing that. LinkedIn posts, as well as making sure we're also looking at the very top of the funnel and building a pipeline for future IC prospects. So we go to career fairs, we participate at schools where there's top talent, and we're, of course, like every other firm, fighting for that top talent and getting our name out there. But for example, we have 2 summer interns that we're currently interviewing for the M&A team right now. And we hope to develop and cultivate that talent such that when a spot opens on the team for full-time, they'll come back.
What about hiring within internally?
Yes, again, thanks for prompting me there. We do very much believe in internal mobility. We like to hire from within. We've done that over really the full history at IAC is, I think Barry said it, you find someone who is ambitious and driven and smart, and you throw them into a role and they either sink or swim, but you make a bet on someone and with the hopes that they can grow and evolve into the challenge that's maybe outside of what they've been doing, but you think they have the growth potential to do a great job at that role. I can point to several examples where we've done that, where people have been given a shot to be a CFO of a company when they've never been a CFO. They've only had investing experience, or take the top spot at a company, having never run a company, but have the building blocks of a lot of things that you need to run a company successfully. Judgment of people, leadership skills, organization, a keen understanding of growth and M&A and all of the above, but didn't have the role of CEO before that. And it's such a rare thing that really attracted me to the company, that they stand by their word and have continued, even as IC has become so successful in spinning out 10 public companies, soon to be 11 with Vimeo, that they've stayed true to, we build future leaders within the company. And when the opportunity presents itself, they have demonstrated over and over again that they'll give people a shot. I think that's rare. A lot of these companies, I think you'd see, or at least in my former life in private equity, you'd hire someone who has a track record of 25 years of running a business that you're spinning out. And we've done the opposite. Young, ambitious people are at the helm of most of IC's companies. And I think that's another reason we are able to attract great talent is people see that IC does what it says in terms of giving people a shot and internal mobility. And that's why people have stayed around the IC network for so long, is because we continuously promote from within and let people wear multiple hats, because we'd rather have someone who has been in and around IC stay within the organization. So it's also a great way to retain employees, is giving them a new role to go and crush it.
What advice would you give to that person that's in a role, but that's super motivated, high performing, high potential, and they want a shot at the CFO, the CEO, getting on the M&A team, sort of following your footsteps? What advice would you give to them where there's sort of that glass ceiling? How do you get that actual opportunity to give it a shot?
Great question. Let's see, it depends on where you're trying to go, but I'll use the example that I know, which is what a lot of folks on my team say is, I want to end up or I want to be an operator. I want to end up going to one of these companies and be in a leadership role. And the advice I give and my seniors give at the very top of our organization is get to know those companies and the people who are leading those companies as best you can. Reach out, you have to be proactive of your own career. Asking permission to reach out really never did anyone good. But if you have genuine interest in a business and a role, the first thing and best thing you can do is get to know the people who are in those roles today and try to deliver value to them. People are generally receptive of others who are trying to help them in their mission. So a good example is, within the M&A team, I think we think about kind of, as I said, a funnel into our portfolio companies. And it's not the only funnel. It's not the only exit plan for being an M&A. But a lot of the folks that sit on my team have the aspirations of being operators. We say, well, get involved in those companies, find where your skill set is valuable. And by osmosis, you'll learn about their company, their strategy, and be able to grow beyond the skill set you currently have just by being around the table. I think I'm kind of making this up on the fly, but what I've noticed in my own career is if you use your skill set to provide value to people in different different divisions of what you're doing with a common goal, you will learn their skill set and they will benefit from yours. And that collaboration creates great things, synergies, however you want to describe it. You learn from them, they learn from you. And then the next time they think, role opens, a lot of people call this luck, but it's never luck. There's a couple of people, they'll remember that, you added a ton of value in that project and, they were, they had more of a skill set here, but I bet they could learn because they learned a lot just by, working side by side with me. So that's kind of a long-winded way of advice, but hopefully it provides some anecdotal.
Proactively network with a give forward mindset.
Yeah, I think that's right. I think a lot of people, the wrong approach is to say, I really want to do this. So should I find a mentor to help me get there? And then wait for next steps from what they think, or wait for the spot to open, because by the time the spot is open, the people who are ready to step into that role have already proactively gone in front of the decision makers, to be very straightforward about it, and shown that they can add value and be great at that. It's maybe it's maybe what am I trying to say here? I guess if you wait for the spot to be open often, it's been filled by someone who's already laid the groundwork to win it.
Right. That's true. You got to be proactive on it. You just can't wait around.
I think that's my overall message, is proactiveness, but also kind of, I guess another piece of advice would be to really understand what you know and what you do well and what you're excited about. If you really distill down why you want to make a shift in your career or move into a different division or a different role or position, try to find the linkages between what you're doing now and what you want to be doing, and why your current skill set can translate or add value to what you ultimately want to do. I think that's a very important gap to bridge, because wanting and doing are very different things. And I also think there are a lot of roles that people think they'd be great at. And I've had this firsthand experience myself. But then when you start thinking about what those roles entail and what you enjoy doing in your current position, you realize actually it's not a great fit, that it sounds good, but the linkages are actually not there. And what you enjoy doing has nothing to do with the job that you think is a right fit for you.
That ties back to why you should even network to get a better understanding of what that role actually entails.
Yeah, absolutely. If you speak to people doing the role today, they will tell you what they spend all day and their weekends thinking about. And you can assess if you would also want to be spending all your time thinking about those things. If the answer is no, you've saved yourself some time with cover letters and references, right?
Very true. How has COVID affected culture and what's the transition been like?
I started this role in a COVID world. So when I joined the team just over a year ago, I started virtually. It was, now that we've lapped it for a year, I think most people can say it was very seamless, amazing. You know, there's been lots of discussion of just how much work and productivity can be done virtually. And so I definitely noted that I was amazed at how seamless and how well the teamwork and collaboration unfolded virtually. That said, I think that we are now at a place where we can hopefully all see a line of sight in having a back to office environment where people feel comfortable coming to the office and meeting in person. I've been back at the office for about a month. And I think that it's proven to me or shown me, I didn't forget during that 1 year that it's hard to replicate a lot of things in a remote setting. And so I'm a big believer that collaborating and the mentorship and apprenticeship that you get in person does make a difference. And I see value in having shared spaces. So it's impacted it. I think every business is going to have to contemplate what post-COVID in the office means. And everyone has to make that decision for themselves about their view on what post-COVID work looks like. From my own experience, I think you can get lots done virtually, but it doesn't replace some in-person collaboration.
It sounds like you're a proponent of a hybrid model.
Yeah, I think hybrid's great. I think people have learned and I can't say it better than you. I think hybrid makes sense because you give people some flexibility in their work schedule in this post-COVID world where everyone has learned what they're able to accomplish at home, while maintaining that sense of what you can build with culture and career growth with in-person environments. I think that makes sense for our group at least.
How's your M&A approach different from when you're working with portfolio companies versus looking at opportunities for new verticals?
So I guess I'll start with the portfolio companies. It's top of mind since we're close to announcing on a deal for one of my portfolio companies and have closed another deal since I started for a portfolio company, care.com. When we look at portfolio companies, our goal is really to be strategy first. So we look at what the company is trying to achieve over a near term as well as longer term horizon, and then look for ways that M&A can either accelerate that plan or help them reach those goals. And so M&A is very integrated, extremely close with our operating company management teams. So with the CFO, and corp dev teams. And we're always guided by the operating team strategy first. We look at it through the lens of does this acquisition get us to the goal faster, better, more efficiently? And if those things hold true, it really comes down to justifying valuation and investment. And of course, M&A team drives and helps to determine whether that view holds true, that valuation is justified, and we want to make the size of the bet. But it's really never without the full buy-in of the management team on faster, better, more efficient. That's the requisite. I'd say and then secondly, on portfolio company, I guess this applies really on both sides. If it's a competitive process, we do need to do the work of why we would win versus others. I think there's this notion of if you're strategic, you always have a higher cost or a lower cost of capital, and you should always be able to pay more. And that's certainly not the truth in this current state of M&A we live in. So it's part of the M&A team strategy or M&A team's role to think through deal strategy and execution, why we win and why we win why we win the race.
So you're essentially mapping these deals to the strategy, which seems to be pretty mature and defined for these portfolio companies in terms of, are they filling in white space? Are they looking for market expansion?
I can give an example on that to kind of bring it to life, I think, because it varies across the companies, of course. Some are much more defined. Their organic growth plan is very much tied to a product roadmap, right? We're trying to get deeper into on-demand services, for example, with care, and we're building a product to turn a subscription service into on-demand. And M&A is definitely looked at in that lens as, can we acquire a business that accelerates that product roadmap or is already there? It's kind of a buy versus build. Market expansion, you mentioned, is something we think about. Supply is something we think about in a marketplace. So at Angie Home Services, we have a network of 250,000 service professionals. We're supply constrained. The consumer demand for these services outstrips the supply we have in the network. So do we think about how to accelerate supply with the acquisition? Absolutely. That can look different, as of course we're not acquiring for stagnant supply. We'd like to acquire a company that will meaningfully accelerate our ability to manufacture more supply. So a perfect example of this would be in a sector where it's a current, let me give an example on Angie, would be look through our top 10 categories, and we know we want to go deeper into the transaction. So one of our initiatives is pre-price services. So rather than the consumer going through a consumer flow and then being matched with 3 service providers, one of our large product initiatives at Angie Home Services to be the company for everything home is to have pre-price services where the consumer can simply click on cleaning service or click on a appliance repair, and we do the rest at Angie. We find the pro who fulfills the job, we deal with customer service, and that's all negotiated up front as a pre-price service. This is a huge initiative for us at Angie. It's the future. It lives with our other offering, but a huge lever of growth. And M&A comes into play, long way of saying M&A comes into play to think through, are there categories of folks where we can identify a company that's done this and owns a market for one of 200 categories that we service at Angie. We think about that in terms of scaling market expansion, but this would be very much category expansion for us.
That's a great example. What's the approach to new verticals? How does that compare?
It's different, certainly. I think on a new vertical, it's much more top down. We like to look at industries where we think the end state is obvious. So I kind of touched on this, but to go back to it, are there traditional industries where things are clearly broken, antiquated, inefficient? And are those big industries that we want to take a long-term view on? Several of our businesses are consumer marketplaces. So I think we would say we kind of can have an ability to see industries that are on that cusp of an offline to online transition. And what can we do with our expertise in consumer marketing to accelerate that adoption of offline to online? And we look for businesses where scale improves the product as opposed to the price. So putting all of these things together, top down makes a lot of sense because number one, you need to find the industry that we're excited about where all these things seem to make sense, right? So big enough TAM with clearly inefficiencies that we can innovate and disrupt, where there are sustainable moats that we can create, whether that be network effects, more, right? And this is the point on scale improving the product as opposed to just the price. So the more users that enter a marketplace, the more buyers, the more sellers, the better the ultimate product becomes for the consumer, the better the product becomes for the supply. We like to see that flywheel working. And at the heart of it, we're looking at consumer experiences and looking to improve, with tech or with new thinking or potentially a new business model that we're excited about making a bet on something that, we're forever owners in businesses, which is a unique piece of IAC. So would we be excited of what the end state looks like 20 years? If we execute X, Y, and Z, what does the business look like in 10 years? And does that get us excited? To give you, at the high level, I think I've spoken to kind of the operational expertise IAC has in building, scaling digital businesses, but we take all of that and try to not lead with what can we do to a business ultimately, because that's an optimization play. We like to look at what's happening. What are the secular trends that are happening in the industry? Who are the incumbent players? I sound very much like a VC investor right now, but that does kind of guide our thinking at the very top before we get into what does the opportunity look like, and how would we run our playbook? Because I think if the previous things are not true, we're using our limited time and resources to run at an industry where it just doesn't make sense for us to devote time and resources.
Yeah, the way you describe it is a little more VC thinking as opposed to PE thinking, where we want to buy the business, fix it, and sell it again. And the things you mentioned, Ailene, are one, looking for highly inefficient industries. We talked about the scale that adds value. It creates moats. The example you used is that network effect, where you get more users, and that allows you to make your offering more compelling and makes it more difficult to compete with. And then the other piece was around innovation, that you're essentially looking for patterns. You're looking for these big trends that are emerging before they're widely known and accepted.
Right. I was very vague when I said the end state seems obvious, or we're not, fortune tellers, but many of the industries that we look at are providing products and services that consumers and people have been using for centuries. So what are the signals or inflection points in the market that you can see that the current state, the status quo, doesn't make sense for where the world is today? I think we saw that in dating with Match. I think we clearly saw that in Expedia in travel, that it didn't make sense to have an offline agent navigating that process for the consumer. It didn't make sense for people to be limited to dating people just within a small radius around them. We're seeing it right now, and I think it's essential to our thesis at care.com, finding childcare and senior care and all types of care for the loved ones around you is a very high friction process that's difficult to navigate, that's emotional. And technology and online can help navigate that experience and make it a more robust offering, such that you as a consumer can find childcare in a world where we spend most of our time on our phone and shop for products and services online. I think you're seeing that in virtually every industry. So we certainly think that's a long-term secular trend that will continue. But we also note that we're not the only ones seeing that. So we look to the industries that haven't been overly cultivated, and we can come in with a fresh perspective and run our playbook.
Yeah, it's fun to think about these, because even as building a business, you can encounter a lot of them. We just went through our SOC 2 audit, which was a highly inefficient process, and one that seems to be at the early stages of having new technologies really transform it.
Yeah, I can point to a couple where kind of the status quo processes have been entrenched in consumer thinking for so long that they're like the obvious ones that, people have spent less time on. People always say to me, that was so obvious that should have happened. But of course, at the time when the industry was where it wasn't obvious to people because, again, perceptions are sticky. And so if things have always been a certain way, it really takes someone to rethink and question the status quo. And of course, a lot of capital and strong leaders and great execution to build those businesses, because I could name 10 industries, I think, need disruption, but are there, the 10 leaders who are going to build great, sustainable, cash flow positive businesses successfully out of those inefficiencies? Unclear. So kind of finding both and marrying the right team, right opportunity, belief in that execution, that's when everything kind of a bit of luck around the way that all of those things work.
That's true.
We've certainly gotten lucky, in the history of IC with all of those things coming true under the right backdrop. But of course, without making a bet, you can't get lucky. So you need to develop the thesis, pick a horse, and do your best to anticipate the possible pitfalls. Think faster than your competitors. I don't think there's any low-hanging fruit in tech right now. There's a lot of capital running at, all the market that is ripe for opportunity right now and offline to online. So given not a lot of low-hanging fruit, it's incumbent on investors to really not only think about the opportunity and just bet on TAM, but find the asset and the entry point that yields the best returns for their shareholders.
Yeah, get all the pieces working the right way to get that perfect storm for success.
Absolutely. And you can't do any of those things without taking a certain level of risk. So we say bet a lot in our industry, but of course it's always qualified risk with outcomes that we like to say, you understand your baseline outcomes, but we want a path to have kind of, what's the word? Exponential growth or an unlock opportunity that, everything can go well. This will be a great investment in a big industry and a team we believe in. And if everything goes well and you get lucky, this could be a 10X. We like to find those unlock opportunities, bet on the team that we believe in, not banking on that unlock happening, but certainly fueling that with our capital, our expertise. And if everything goes right, you still have that chance to kind of really see the full vision take place. That's really exciting to us.
Yeah, so there's a lot of opportunities to create value.
Yes, especially at a certain scale. I think, we're trying to put $3 billion to work right now. We have to think about capital allocation and what's the best, return on our capital and return on our management time. We are set up to, build companies. Certainly that's what we've done over our 25-year history, thinking ahead, growing businesses, but you can't do that across a portfolio of 50, and we recognize that. And so return on capital and return on time are both important considerations for us.
One of the things that always intrigues me is the governance around doing deals. Can you walk me through what does the decision-making process look like?
I'll keep it at a high level. I think that I describe it as collaborative and team-oriented throughout the entire process. We have a weekly meeting with our C-suite, and we manage our deal process as anyone would, with a funnel of opportunities at the very top, and that gets whittled down over time with the best opportunities that give our execs our execs are most excited about at the end of the funnel. I think that our weekly is meant to cover everything within that funnel. So making sure that we're at the very top of the funnel, we're looking at the right sectors that there's interest in pursuing further as things progress and opportunities become more harvested, making sure reviewing in detail kind of due diligence and what are the key questions we need to understand for us to get super excited such that we would be interested in bidding on a company. And then all the way through execution, making sure that at the very top of our organization, we understand kind of what we're buying, which ultimately is the most important. But without having the previous steps, all of that context, you miss it. So in the best processes, things start at the very top where they're still in ideation discovery mode. We look at, to use my example earlier of a new vertical, you look across an industry that we think is really exciting. we identify all the companies that are chasing that opportunity. We make an assessment along with our management team on who we think is best positioned to win that industry. And then, of course, is the actual deal making process. Is there a deal to be done? At what price, and does it make sense for us? Do we want to take that bet? And our CEO, CFO, CSO are all involved in that process along the way. And if it's a portfolio company acquisition, that management team. So it is very much a collaborative. I know that's a high level way of describing it, but it has to be collaborative in that you have several actors at play here. You have an M&A team, you have a potential portfolio company, and ultimately our shareholders. Our execs need to be able to stand in front of our shareholders and say, we support this acquisition. This is the future of IAC growth, and we're putting your capital at work in this new investment.
This is interesting. You got a lot of stakeholders involved. It needs a collaborative view because there's a lot to weigh in on the strategy you're executing. Who's got the most influence between the CEO, board, yourself, and so forth?
You have to think of like the capital like your own. And yes. So every stakeholder who's in the decision-making room, down from, someone in M&A, myself, portfolio company, at the very top of our organization, we all have to think like owners. And like you're writing a check from your own pocketbook. And that's a level of conviction that I think you need in order to stand in front of our CEO, CFO, CSO and say, I recommend this deal. That being said, I think it's very clear that my position is to surface opportunities and put them in front of people, do the work, make sure that all along the way, our team, our M&A team is working alongside the portfolio company, to my whole point of we would never do a deal without their 100% buy-in. Then it's managing that alongside the execs at IAC and making sure we're all cohesive and agreed upon what the thesis is and what we're willing to pay and the size of check we're willing to write for a deal. So there's no clear cut. There's a decision maker. This is the process. I'd rather just think about it as, my team is responsible for sourcing, diligencing, and executing opportunities. And we bring people along the way that are the decision makers. And then it's a collaborative decision on we should do this or we should not. Not top down, not bottom up. It's truly collaborative.
No matter where the deal comes from, you still need to take that owner mindset and considerations across the team.
Absolutely. And, we're all equity holders in IAC. That's a huge portion of, our compensation is your stockholder. It's something that I think is so important, is to have a stake in what you're doing. And we emphasize it a lot on our team is, would you write a check? It kind of goes all the way to the top of, if you have conviction for an idea and it's a good idea, would you write a check from your own bank account, and why? And what size of that check of your personal wealth would you be willing to put on it? I think people have different risk appetites, but if you don't have that level of conviction, you can't stand in front of our board and say, I recommend this deal, if you wouldn't recommend it for yourself.
Fair point. How do you measure success on your deals?
Yeah, it's a good one. I think that, we are a public company. So of course, an important measure is the value we deliver to our shareholders. I don't think about that on a day-to-day basis. I think that would be very a myopic way of looking at success. It's just our share price. I think we definitely take a longer-term view. We set long-term goals for our businesses like any other investor. But then we recognize that it's not necessarily a linear path to get there. So short-term pain for long-term gain, I believe in that if the ultimate long-term view is the right one. I think we're really open and honest to the street about our plans to do this when we're in build and invest mode for our companies. So Angie is a good example of this. We're undergoing a business transformation right now with the change from kind of a lead connecting marketplace model to a true consumer fixed price product that we're delivering. When you're in build mode, you need to invest, and sometimes you're sacrificing short-term profitability, and that's okay. I think that to distill it down more simply, we're not a private equity firm, so we don't look at a 5-year exit. We're forever holders in many of our business, or that's the lens that we look at things. So 10 years out, is it a sustainable, growing business with strong margin profile and moats that make us think it'll be around for the next 10 years? That's probably success when we're thinking about on a deal by deal basis.
Is there a challenge with being a public company, having these strategies that are built around a long view, but then as a public company, you're essentially measured on a quarterly basis?
There's a rub, though. I do think the public investor community that gets IAC gets us and what it is that we do, because we've demonstrated such a strong track record of running our playbook, that they get it, that it's not, we deliver strong results to our shareholders. We have for 15 years, if you look at our performance. But that growth has come in different ways from different businesses and different points of their maturity. Vimeo is a great example. We're going to deliver a ton of shareholder value from a business that we really acquired by accident over 15 years ago and harvested and grew it and transformed it into now a multi-billion-dollar business. If you look 5 years ago, maybe you wouldn't be clear on this outcome and what a great investor return it has been. But I think that our investors have given us, or given our performance, give us the flexibility and the benefit of the doubt that we are smart stewards of capital and can take a long-term view in building businesses, our core expertise.
Stay true to your vision.
We haven't strayed from it. So I've only been here a year, but I think that legacy really imbues everything that we do. We do look at past principles without being, as I said at the very top, a theme. We look at what's happened in the past, rethink it, and it does form our view going forward. So we don't have to, think history is going to repeat itself 100 times over. Of course it won't. But using past experience to color our view on what might happen in other industries has certainly been a great pattern. And you can point to many similarities between what we accomplished in Expedia, Ticketmaster, et cetera, to know that, consumer marketplaces is the theme at IC, but to distill that down as our only strategy would be probably too simplistic.
Can I ask you some questions for fun?
Sure.
The reason I want to ask is we have this M&A Science Academy, and we're launching a diversity scholarship at our next event in June. And I thought it'd be fun just to kind of get some little highlight perspectives that are just more fun career questions. And it might fit in with this interview too.
Sure.
So totally off the cuff, be natural, have fun with it. Now, our goal is just to introduce M&A as a career path to more diverse background, more women, more different folks. And a lot of people talk about it, but there's no real actions. We're like, why don't we just give access to the training for free, and we'll see if you can really enable a better talent pool that way. So one question is, how did you get into M&A? What drew you in and got you interested in this field?
I had an undergraduate business degree, so I studied business at Michigan. It's a 3-year program. It's now a 4-year program. Very similar, I think exactly same coursework that you would have as a BBA, as an MBA. So you learn accounting, finance, marketing, and then you need to find a job after you graduate. So I stumbled upon M&A and really through investment banking. And I was attracted to investment banking because of the fast-paced deal culture that I believed it to be based on description. Didn't know what I was doing. I'm much less, at the time, this is 10 years ago, much less probably because lack of internet at the time. So I was less read about exactly what it is to be an investment banking analyst, except that I knew that it was fast-paced, highly intellectually stimulating, other ambitious people who hoped that it would be a platform to do something else. Or you can stay as a lifelong banker. That was less attractive to me. When I was in investment banking, I was in a sector focus group, which was consumer retail. I wanted to learn everything about doing deals within that sector. That fascinated me, becoming an expert in consumer deal making. And that ecosystem just always, they say follow your passion. What naturally comes to you that you naturally think is interesting. It was always consumer for me. And so I think M&A was a piece of the strategy of most of these companies that I just thought was such a faster, maybe I'm just like a speed freak, I'm really not, but a faster way to develop visions and strategies, right? Like you see these businesses with these 5-year plans and developing all these goals organically. And then some companies are masters of M&A. They just see the future and they can get there that much faster and accelerate their growth by acquiring other businesses. So I think that speed and that excitement and really attracted me. And it was all kind of grounded in, this was an industry I really liked. I like to read about it outside of my day job. I like to follow what was happening on DealBook. Just for anyone who is in, thinking about a career in M&A and where they want to go. Sure, be pragmatic and think of where the industry is going, but go on DealBook and focus on the deals that you like reading about. What naturally is interesting to you, and follow that intuition, because I think so often we're told to not follow your intuition, like do what makes more sense, what's most practical, or where all the dollars are heading right now, what's best for your future career. And I think that sometimes leads you astray. You should just stick with what you think is fundamentally interesting to you.
What do you love about being in M&A?
It is a fascinating place to be. You can learn so much by looking at a deal that would take you years as an operator to learn. Maybe my operator colleagues will disagree. But I think you just get a crash course in industries by looking at a deal, right? Because immediately you have to understand all the dynamics at play for a company, where they sit within the competitive landscape, what their strategy is. And you can read that through their financial statements, right? So it's such a good way to distill down the value of a business, right? So you're looking at how should I value this business? You kind of need to know everything to value a business. You need to understand their strategy. I'm being repetitive at this point, but that's what I love about it. It's a crash course and you have to come to a decision at the end of it. So I like the finality of it. The deal process to me offers a lot in that there's a time horizon, generally it's competitive. But that through that process, you learn so much just by can't get to the answer without knowing everything that comes before it. And I can't say that I've worked in so many industries outside of M&A, since most of what I've done has, but I've spoken to enough people who have done different product functions where I think it's hard to get to that speed of learning in tons of industries. There's many, tons of career paths.
What do you dislike about being in M&A?
Probably the same thing. It's very demanding. It happens on a timeline that you can often not control. So it's highly competitive. It attracts people who tend to like the same things about it, so that it's fast-paced and that you have to move at a quick clip, that it's highly competitive, of course. I think I've said 5 times. And so it requires a lot of dedication and rigor in terms of not just getting to the place where you can evaluate a deal, but all the work that goes into getting, the work that goes into becoming an M&A professional. There's a lot, and that's there's never a state, maybe I guess every industry kind of has the same thing, but actually I don't know about that. There's not a state where you get to in M&A where you kind of can just cruise, because it's always the next challenge and the next deal. And maybe that's what's so attractive about it to me, is you're kind of always learning. But with that comes as you can imagine, it's just high pressure.
Advice you'd give to those interested in pursuing a career in M&A?
I guess look inside of, number one, why, what drives you. I think it used to be when I was, in college, you're really analytical, or what are the other things? I feel like analytical skills was like the number one thing that they would say, is needed to have a job in M&A. I think that's so just baseline. Like, being analytical is great, but there's so many things that you have to look inside to see if you'd like this career fundamentally, because there's many things you could do with an analytical mindset or skill set rather. So advice, I guess I said this already, but talk to people who are in the field, what their 9 to 5, or who has a 9 to 5, what their workday looks like, what the steps were to get to what they're doing now. And if it sounds like a challenge that, you want to do, then read all you can. Spend all of your time reading about what's happening in the market. The great thing about M&A is there's a whole public landscape of business news and now it's even more pervasive, right? You have people in, kids reading about investing in podcasts and on the news or in business news articles as young as, 8, which is wonderful. Maybe the tools were always there and I just didn't see them, but I think it's great the amount of democratization that's happened in investing, and you should use those tool sets to get you up to speed.
Last question. What's the craziest thing you've seen in M&A?
What's happening right now with the speed of investment capital being deployed by some of the top tier VCs? There's been a lot spoken about just the pace, and it's a investment strategy in and of itself of just speed. I think it speaks to how competitive the landscape is currently, how much conviction there is in a lot of these industries that are being disrupted by tech, and that you can really differentiate yourself by being faster and more decisive, which was not always the case. It was who was the best at, identifying an opportunity, but then doing the work and the fundamental work to get to a deal. And that was a process, and there were rules to play by. And there are firms who are just bucking the trend by saying, no, we'll make a bet much faster. We'll get to a decision such that the company wants to work with us because we were that much more decisive. And you're seeing this unfold at a grand scale, which has real implications for strategics, for other sources of growth capital, for private equity. And I think this no rules world will continue. People will find other rules that don't apply and try to exploit them and get a competitive edge in that way. I love thinking about what your edge is, right? When I worked in private equity, often, when funds raise capital, you have to talk to what your edge is in winning a deal. And I think about it all the time now, probably at a grander scale, as, we're a strategic, but also a holding company, and we're competing against many different capital allocators. And so edge is so important. And I think the way to get edge is not just clear cut anymore. It used to be, longstanding reputation and brand and total dollars. There's so many ways to find edge in this new normal that I think you're going to see a lot of companies finding new ways to find their competitive differentiators. Today's
market is the hot, crazy thing that demands speed, and you got to have an edge to win.
You do. It's, I'd love to, I wish I had a 10-year, I could jump forward in time and see what M&A looks like 10 years from now. I think technology and systems will certainly have a key role in playing how people find edge. You've seen that in the public markets, of course, years ago. You have seen it less in private markets, but I suspect that a similar story will unfold and in private markets. It's happening already, but not at the scale that it has in public markets.
So interesting. Ailene, Thank you so much for your time today. I enjoyed this conversation.
I did too. Thanks for having me.
My pleasure. Here's to the deal.